Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. We're joined now by Ivan Feinseth. He's the head of research at Tigress Financial Partners, and Chris Irons of Quoth the Raven Research. We're talking about Herbalife. And Ivan, I want to start with you. Some news in Herbalife on Monday. They're being the country is starting the Ministry of Education, the Ministry of Public Security, and a few other government agencies are going to lead a 3-month rectification campaign to target employee recruitment with regard to MLMs. And this sort of hurt a bunch of MLM stocks on Monday. Herbalife itself fell 7%. So you have a buy rating on Herbalife. And this was news from August 14th. What did this news do to your underlying thesis?
It hasn't really changed it. Herbalife specifically has a 37-year proven successful business model. The multi-level marketing or direct selling marketing has been around and been very popular for at least the past 50 or 60 years, but it's really over 100 years old. And while it has received criticism sometimes in the past, it is, in my view, the equivalent of an insurance company that hires commission salespeople to sell insurance and gives them a significant commission or percentage of the premium, at least in the beginning. So I believe that companies like Herbalife have chosen the direct selling or multi-level marketing to sell their product, as opposed to more traditional marketing, where in Herbalife's case, it could just be another product that's on the shelf of a GNC or a vitamin shop and having to deal with the other costs of marketing to sell the product that way.
So, Chris, how did you interpret that news on Monday?
Well, look, I mean, I think that answer, with all due respect, is mostly nonsense and riddled with, all different types of fallacies. But look, the news could have a very profound impact on the company. I think everybody in general, especially people on the sell side that are out there pushing the stock, are ignoring what are potentially a litany of worldwide regulatory risks that still exist. So not only are U.S. regulators still not done with the company ostensibly, as we know the SEC is looking into them for Foreign Corrupt Practices Act violations in China, but also, we don't know if other governments around the world are going to follow suit. So to come out and just write off this investigation, which admittedly, nobody really knows that much about. It was reported in one Chinese media source, to the best of my understanding. There was some reporting that was done this morning on it by the Wall Street Journal that went a little bit more into depth. China is and has been the largest growing segment of the company's revenue base. It makes up right now about 20% of the company's sales. And I was reading a blog this morning on one of the MLM blogs that was laying out basically a timeline of things that they hope to do for this investigation, which I think this is all translated from the original article that came out. But, basically says that the Chinese government or whoever's running this investigation is going to put together a list of individuals that they might be suspect. And then in October, they may take action. And admittedly, to Ivan's credit, we don't know if Herbalife's even going to be involved, and we don't know if they're not going to be involved. However, to say that, this is nothing and to just write it off because the company has 50 years of experience running a business model that the FTC has come out and found to be ethically dubious. Excuse me, let me just finish my point. The company's been running a business model for the last 50 to 60 years, which is ethically dubious and doubtful. And that's giving it credit. That's not laying into it too much. But to just come out and write it off as if this is a non-event, 50 years of operating history does not predict what's going to happen this year, next year, the year after that. Stock market is a forward-looking, instrument, and I think that's a fallacy to make that argument.
Well, Herbalife's only had a 37-year history. but multi-level marketing has been around longer than that. There have been no specifics,
Fair enough.
and the government itself has really not outlined all of the issues. I mean, we're really getting this third hand from various news sources. And
sure, but
again,
if you read the company's filings, there is an ongoing FCPA investigation in China right now by the SEC. Is that correct?
Not the SEC in China?
It is correct.
Okay, the SEC
answer is
in China?
Yes, it is correct.
Okay, well,
Wait,
no, you're talking about
Chris,
the SEC
Chris,
in the US?
that's in the U.S. now,
I'm
or
not
are we talking
following.
about
The
China?
United States Securities and Exchange Commission. See, this is the problem. People don't even read the filings. The United States Securities and Exchange Commission is conducting a Foreign Corrupt Practices Act investigation where they have requested documents from the company. And this has been language.
Oh, okay, yes.
that has been
So
in
you're
the
saying,
company-
no, that the SEC has an ongoing investigation in China. The SEC is not investigating anything in China. They have been requesting information on companies here operating in America, but not specifically in China.
Okay.
And so I read through your note this morning, Ivan, and nowhere does it even mention that. I mean, do you discount that risk at all? Do you discount the risk of something
No.
like this news that comes out here, over the last couple of days at all in your analysis to go out and buy the stock the way that it's valued right now?
No, I don't discount it. There is all kinds of operational risk in every company, and this has been, and the ongoing concern
This isn't an
about
operational risk. This is a regulatory risk. At its
there's
core.
headline
That-
and
that-
regulatory risk that affects different companies in different ways.
Okay.
However-
I haven't finished a thought, and then I want to jump in.
Okay. This has been known for quite some time. All of this has been known for quite some time. And they've continued to, Herbalife, as I'm now specifically talking about Herbalife, has addressed this, and they continue to make changes. And at one point, they did pay a fine and have increased compliance with new rules. And this has gone on for quite some time. But I think, yes, it is a risk and it is a concern. But there are a lot of risks and concern, no matter what type of business model you have.
Okay.
Well,
So
look, hold on one sec, Spence. Just give me 1 sec. I mean, that's a bit of a cop-out, number one. The FCPA language just first started showing up in Herbalife's presentations and annual reports, I think about a year ago. And so this is an entirely new regulatory angle that has been taken on here, separate from the FTC and separate from what has already taken place. And so, models need to be adjusted, risk profiles need to be adjusted in order to account for that. So to just basket it with everything else and say, look, there's a lot of operational risk that's been going on with a lot of companies, and every company has risk factors, and doesn't do justice, I think, and certainly doesn't take into account the concentration of business that comes from that segment of the world. I mean, I think it's doing a disservice to kind of cop out and just say, well, every company has risks.
Well, I'm not copping out.
This company has very
definitely
specific. Go ahead. I'm sorry.
China is one of the key growth drivers of their business. The expansion in China is looked at as a big growth driver, and I think at some point will exceed the revenue in China will exceed the revenue in the U.S.
Okay, so I want to bring it back. So that was just all reaction to the news this week, but I want to bring it back to the whole Herbalife story. So, Chris, there have been some well-known shorts in the issue, where obviously Ackman and the documentary Betting on Zero sort of highlights his crusade, his short against Herbalife, and yet he's underwater a lot here. The stock has pretty much done nothing but go up in the past 2 years or so. So how do you reconcile that, all those risks with the fact that the stock is actually, up since Ackman has gotten in?
Sure. So there's two things going on here. The first of which is the stock hasn't done everything except go up. I mean, it went down to 30 on his announcement. It bounced up to 80 on a short squeeze after Icon came in. It tooled around there. It came back down to 70. It went down to 50. It came back up to 70 after the FTC announcement on, anticipation of another short squeeze. And now again, it has started to drift lower again into the lower $60 range. So to say that the stock has done nothing but go up since this campaign has started is
okay.
I don't know if
so
it's
all right,
I'll give you the benefit of the doubt.
It's been very, very volatile.
It's been volatile, but it's performed well.
but for the year it is up a tiny bit, and from its low to its high, and the 1-year bottom that it made in December of in the high 40s to reaching 75 before it backed off. That's a significant move up.
Okay.
I'll give you that. I'll concede that. Now let me make this point. The company has failed. Not to bring another analyst into this, but Tim Ramey is really the one that pounds the table on this name a lot. And since he's been covering the stock, it has failed to hit any one of his targets. And the reason the stock has moved up the way that it has is because the valuation has been expanding. This is not a case of a company that is banking more cash and shoring up its balance sheet and creating a war chest for itself and growing its cash flow stream and growing its organic business worldwide. This is a situation where a company has levered itself and continues to lever itself further with every dollar it spends on buybacks. It has put a bid under the stock from buying back stock. It has locked up a significant portion of the float with investors like Icon and any of the other names that may have followed him in there and may still have, large chunks of the float. And so from a stock price perspective, it's mostly a technical story. It's mostly, a story of supply and demand and a story of buying back stock. The valuation has just gotten more and more aggressive the higher the stock has stayed, while the underlying organic fundamentals of the company continue to deteriorate. So to make a case that multiple
the underlying
from here
fundamentals have not deteriorated. Their revenue bottomed in 2016. Going in
the guide
12-month
the
period.
guide for this year for the company 3 years ago was something like $7 or $7.50 a share. All right, in GAAP earnings, they're expected to do. And by the way, free cash flow has also come way off. So in the trailing 12-month period,
I don't really look at earnings per share. I look at economic profit. I look at operating cash flow. I do look at different measurements than other people.
All right. Well,
however, operating cash flow, economic operating cash flow also bottomed in 2016 at $590 million. For the trailing 12 months, it just ended in this recent quarter. It increased from 600 million, let's say, to almost 750 million. That's 25%. So cash flow went up in the past year, 25%. We estimate going forward at least another 6 or more percent to almost 800 million. And I believe this company can get back to its historic growth rate before you had to be distracted by all of these issues, the short selling controversy and the FTC investigation and other issues. And this stock can grow and probably surpass its recent high in revenue of $5 billion and probably grow to be $6 billion in revenue over the next 3 to 4 years.
Well, I just think that, first off, we might be looking at two different sets of cash flow numbers. That's number one. But number two, to be able to say that the company's going to be able to, again, reach its pinnacle and surpass it over the next 3 to 4 years, when the list of risk factors, including many of the unknowns coming from the FTC settlement, which we'll start to see here over the next couple of quarters as these new rules have been implemented, I think it's just I just don't find that to be an accurate way to make a forward-looking analysis. I think the risk.
Well, but we have to make a forward-looking analysis that will have risks. But I have an expected growth rate and an expected trend to revenue, and then subsequently cash flow and then net operating profit. That it will go along that trend. And every business has risk, and every business has regulatory risk. They have competition risk. They have product risk. They have headline risk. I mean, this is what the stock market is all about. I mean, to specifically single out Herbalife, yes, it has been more controversial than some other companies, but they have continued to overcome a lot of these issues, and these issues have been around for some time.
I agree with you, and I disagree with you. Where I agree with you is that all companies do have a myriad of risks, and that discounting those risks and making a forward-looking analysis is what you're supposed to do and what analysts get paid to do, right? I don't disagree with that. What I would say is that not all companies, Herbalife has a litany of risks that are built on top of a business model which has not yet been proven that in the United States it can operate with the same type of robustness and the same type of consistency and the same type of, regulatory good faith in the fashion that it has in the past. So,
Wait, you mean in the United States or in China? Now, are you?
No, I'm
saying,
talking
yes.
about the United States now.
Okay,
And I'm
so in
saying
the United States, the company has been around for 37 years.
Yes, but how many of
It's
those years
been
have they
public.
operated under the? How many of those years have they operated under the FTC's new injunctive relief rules?
Okay, but the rules
answer
are
is-
new, but
the
they
answer is zero.
not
The
only
answer
are
is-
complying.
The answer is one
Well,
quarter.
no,
The answer is one quarter.
they are
So you can't
not
bring
only
up,
are they complying. Okay, they are not only
you can't bring up
complying.
37 years of operating history
all right.
and talk about a
No.
company whose
The
business
37
model-
years, it's still a fact that the majority of end users just want to buy the product and not be distributors. And the reclassification of those people who just want to buy the product and not be distributors as preferred customers versus those who are business builders who want to resell the product, I think makes things clearer. The regulations have actually helped. They've made things better. The company is complying, and they are exceeding the 80% threshold. It's been 90% for the first 2 quarters that they've had to follow those guidelines.
I'm going to give you a reading assignment for when you get off the phone with me. There's a fantastic article on Seeking Alpha. I think it's written by a gentleman by the name of Gary Milne, and the title is something to the effect of how Herbalife has gained its preferred number metric that it's posting. And I'd encourage you to read that article very closely when you get off the phone and look at some of the manners with which this article alleges that the company has come up with their preferred members number. The second thing I would just say is that one quarter, so one sec, let me just make this one point and then I'll give you a minute to respond. The second point I would make is to say that everything is going fine and that they're complying and there's no issues just based on one quarter wherein, the company was just starting to implement these structural changes in the business, I think is an inaccurate way to forecast the future. We get 4, 5, 6 quarters here under our belt. We start to look at some of the trends that the company posts in the United States after this injunctive relief has taken place. And if the numbers stay the same and everything looks good, then you can come back on here and tell me that I'm an idiot and I was wrong. But to look at it for one quarter and to say everything's fine and everything's going to be fine, is taking the same type of, blasé attitude that people took heading into the FTC settlement when they said, well, nothing's going to happen and we're going to be exonerated.
Well, first of all, if everything goes well for them for 4, 5, or 6 quarters, the stock won't be at 63. The stock will probably be at north of 100. So that's the risk. I
vehemently disagree.
Well, wait. If they have 6 great quarters where they've
We're talking about in the United
States.
This business is the numbers have been down in volume points, in member signups, in volume points are really the best, purest way to gauge the business. But if you start looking at like rolling year-over-year comps and volume points over the last 2 years, and I don't have the regional key metrics in front of me, but you can refer to the bottom of the company's last press release going back a couple of quarters, and those numbers have trended lower over the last 2 years.
Absolutely.
Around the world.
Because they've been undergoing all these investigations, and it's been distracting for both the company's management and the members and people involved. That's why revenue is down. I've said revenue dropped from a peak of $5 billion in 2014 to a trough of, let's say, $4.4 billion in the last quarter. So now it's starting to, the last trailing 12 months period, ending the last quarter. So now it's starting to go back the other way.
The fact that this company last quarter far exceeded its EPS estimates and missed its revenue numbers is a microcosm for what's going on under the surface here. Okay. It's indicative of a company who's, tried and true downtown organic, fundamental, financial, what they're bringing in the door, what they're doing on the top line. Like you said, revenue has bottomed for now. Those numbers are off. The volume point numbers are off. Now you can attribute it.
There is no secret to that.
Hold on. Okay. So what I'm saying is you can attribute it to, this has been a huge distraction for members and it's been a huge distraction for management. Okay. That's fine. You can attribute it to that. But there's also an argument to be made that actually the opposite is happening. or in public awareness based on this, controversy over the last couple of years, and based on this documentary that's recently come out, and, things like this John Oliver piece that has come out, is starting to filter itself into the mainstream. This has been a Wall Street story for 3-4 years. I've been researching it for a while.
The stock has been a Wall Street story. The sales of the company's products is a Main Street story.
No, I completely disagree, because I've spent
I would say
4 or
most
5
Wall
years.
Street people are not really Herbalife distributors for the most part.
All right, here, let me make this point real quick. For 3, 4, or 5 years, or however long I've been working on this, I've had numbers of conversations with people that, are not in the business of finance. People that have heard of the company, they don't really understand the model. Maybe they've had some experience with, a family member or a friend who's worked in multi-level marketing or something like that. And none of these people understand the story behind the scenes. People know, they see in CNBC that, it's Icon versus Ackman, or that it's a controversial name. But people on Main Street don't really get the bits and pieces of this whole story. And what we've seen over the last year, I'm just going to finish the sentence and I'll give you a minute to talk. What we've seen over the last year, starting with the FTC coming out and making some incredibly damning statements in their complaint against the company, which is a whole other conversation in itself. But aside from that, we've seen a documentary and we've seen a piece on, premium cable that has taken the story, distilled it into terms that people that aren't experts in finance or may not have personal interactions with the multi-level marketing industry can understand. And what's going to happen is, at some point, there's going to be an inflection point where the public wises up and realizes that the business opportunity here that these companies offer may not be the golden ticket that they're making it out to be. And when that happens, you're going to see a large secular shift in the way that in the same way you've seen about pharmaceuticals, the same way you're seeing now about the opioid crisis, you're going to see a large secular shift on Main Street about the way that people think about these companies. And when that happens, this company will be so levered and the cash will potentially have dried up at that point, that I think that presents a serious long-term risk. So to argue a case for multiple expansion here, I just don't see it. It just doesn't make sense to me.
I'm not arguing a case for multiple. I'm arguing a case for business growth.
Okay, I actually want to jump in here. So you guys kind of walked around this, and I want to ask both of you, do either of you know anyone who is an Herbalife distributor or who uses Herbalife products?
Yes.
Okay, and what have they told you?
They are not really that focused on it. There are people who like the products, but there are people who like the products and buy the products. And there are people who are engaged part-time in selling it, and they enjoy being involved in it, and they make a little bit of money on the side doing it, and they more enjoy the interaction. And this is what the people are telling me, okay? The products, for the most part, people like them. They are good. I've had various products over the years from Herbalife, okay? They're good, and people like them. And they don't really, and most of those people don't really care about what's going on in the stock. Okay, they may have some interest in the market in general, as most people do. The other people, the majority of Herbalife distributors make a little bit of money selling it. You have a few people who have been involved for a long time and have a major focus that have a very big downline, as the term is in their group of in their levels. And some people who have had bad experiences because, hey, sales are hard. I mean, it takes a lot of work, and selling is not for everybody, and trying to engage with friends and people to buy things from is not for everybody. But overall, people like the products, and the distributors who are focused on it like being a distributor. And those are facts.
And Chris, what about you?
So real quick, just two little responses to that. The first is, arguing that the products are something special is just not an argument.
I didn't say they're special. I said people like them.
You said people prefer the products, right?
I said people like the products. They don't have to be special for people to like them. People like them.
Okay.
So let me just make
so
a point.
I guess to the people who like them, they are special to them. Okay.
Okay. Fine. people like the products, right? That's the
Yes,
argument.
they do.
So I'm gonna give you two responses. One is my personal experience with the products, and the other one is why that logic is, a fallacy. All right.
It's not logic. You asked me, do I know people? And I said yes, and I'm telling you what they say. They say they like the product.
I'm going to make a broader, more generalized response to that in general. Just the nature of the market with which their major product, for example, Formula One, operates in. So
yes.
You go to the store, you buy a canister of GNC's Lean Shake, and you get a canister of Herbalife Formula One, and you turn them both around. For the most part, the ingredients are going to be almost identical. They're almost identical products, right? One's going to be priced at a significant premium, and that's the Herbalife product, because a lot of that, premium that you pay for the product in the same canister, the same size for the same ingredients, has to move to the downlines, has to pay for this other arm of the business that operates, right? So what stops somebody from going to GNC and buying a canister of Lean Shake for $23 or $29 or whatever it is, and taking the time to go and buy the Herbalife product, which, is ostensibly going to be $39 or $49. It's profoundly more expensive.
The price difference, no, it's not. It's not that much more expensive. And also,
it's priced
you got to
premium,
realize,
is it not? The answer is yes.
I think
anyways,
for the price points of the products, they're a good value. I mean,
that doesn't make any sense. I'm asking you.
Okay,
a commoditized product that's priced at a premium to GNC's Lean Shakes.
Okay, so
okay, I'll say yes, and they still sell it. They sell a premium price product. Okay,
perfect.
There are a lot of companies that sell premium price products.
Let me finish my thought.
So there is some premium there.
There's two reasons to pay a premium, right? One is you make a superior product that the free market decides is a better product.
Yes.
Or perhaps you're into the social aspect of the business, and you like buying the product from somebody who's going to come over and wake you up every day out of bed and tell you to go for a run or whatever you have to do to exercise. But there's also an argument to be made.
That would be good. I would like somebody to do that.
Excuse me. There's also an argument to be made that the product sells at this premium because it's attached to this idea of a business opportunity, whether it's a part-time business opportunity or whether it's a full-time business opportunity. Now I'm going to give you a personal story of my use with Herbalife products, and I'm going to keep it very, very short because I know Spencer always thinks that I talk too much. Years ago, when I lived in Philadelphia, I was working my way through graduate school, okay? And I made a dear friend of mine who was a professional soccer player, okay? He moved into the apartment that was next to the bar that I worked in when I was slinging beers for a living. We became good friends. We talked about soccer. And at some point, he had me over to his apartment to help him unpack his stuff from Mexico, where he had been playing prior, or actually LA, where he had been playing prior, to Philly. So I did that. And upon doing that, I came across 3 enormous boxes of Herbalife products. There was all of them. There was Liftoff energy pills. There was Formula One shake. There had to be 10 or 20 different products, right? So he asked me if I wanted them. And this was, I think, 2007, 2008. And I kind of I wasn't really even involved with Herbalife. I hadn't looked into multi-level marketing companies at all. And I said, yeah. He said, I don't want this stuff. Take it with you. So I said, fine. So I took it back to my apartment, and I looked at the expiration date on everything, and everything was 2 or 3 years old. So the stuff had been sitting around for a while, whatever. I found one product that had not been expired. It was a Liftoff. It was called Liftoff Energy Drink. These little tablets, you're supposed to drop them into water, and they're supposed to create the equivalent of, having a Red Bull or an energy drink. So one day I ran out of coffee, getting ready to go for my morning run. Said I figured I'd try one of these, right? Tried it once, never touched it again, promptly took the entire box of products and put it down the trash chute. Now, that's just my personal experience with the product. I've had other friends of mine, specifically in college, that were pitched the product that had similar experiences like that. And the reason is these products are just, Herbalife has this PR notion of seed to feed. We're going to do everything from the ground up. We're going to, these products are just commoditized versions of products that are already on the market. Their arginine product is under patent from somebody else. They licensed the patent. It's not even something they created in-house. The thing is, when you're running the business model, when you're running the business model that these guys are running, it doesn't matter what the product is. It really doesn't. I mean, whether it's Nu Skin, whether it's Herbalife, whether it's USANA, whether it's Longevity, whether it's any of these multi-level marketing companies, they're selling you a story, they're selling you a narrative, they're selling you a business opportunity, but what they're not selling you is a product that is in any way profoundly different from something that's on the shelves already and priced usually a lot cheaper.
Okay, so
the free market decides what people want to buy, and people.
Excuse me?
The free market decides what people want to buy, and there are people who like Herbalife products and they buy them.
Okay,
you are correct, but
so,
would they be buying them if the product was not stapled to a business opportunity? What's the point of buying?
But the people who are just using them to consume them, remember, are outside of the business opportunity. They buy it because they like it. And nobody would buy a product that they didn't like.
Because nobody's going to volunteer to pay 20 or 30% more for a product that they can go out and buy from GNC or have shipped to their house.
But not
GNC.
not everybody who uses or consumes Herbalife products are distributors. The majority of the people are end users. And this has been the controversy. And this is what's coming out. They are end users. So either they buy the product because they like them, or they buy the product because they like the person selling it to them and they like the product. Okay? Nobody is going to buy a product that they don't like, and nobody's going to buy a product from somebody who they like, even if they don't like the product. Okay?
So your argument is that if you go out to buy a Mercedes tomorrow, and there's a dealership that's a mile from your house that's selling the model you want for $70,000, but you got a cousin that works somewhere, who you want to give some commission to, who's selling the same exact car for $92,000, that you're saying most people would expect
my cousin to sell it to me cheaper.
Okay,
by the cousin selling the product, I would absolutely. I would expect it to be cheaper, and I'm sure people do. But you're saying people still attach value to the Herbalife products, and they like them.
Okay,
I'm not going to pay $20,000 more for a car because I like the guy, but I would pay the same price because I like the guy. Okay, and
many of the participants that participate in Herbalife's business model and who use the product on their own, some of whom I've met over the years as I've been doing a lot of research, many of these people, are regular middle-class people that, to make the argument that they would go out and volunteer to overpay for a commodity product for one reason or another, as opposed to going and getting it at a 15%, 20%. I mean, here's a question. Why can you go on eBay right now and buy the product at a discount to what the suggested retail price from Herbalife is? Why is eBay flooded with Formula One that you can buy right now at a discount?
Because eBay is flooded with all kinds of products you can buy at a discount.
But fundamentally, from a
that's
free
why
market
people do buy on eBay. People look. You can buy brand name products on eBay at a discount. That's
why is the supply there?
Do.
Why is the supply there?
Why is the supply there? Because the demand is there.
Okay,
I mean, that's not true. Hold on.
I want to jump in here. I want to jump in, and you guys aren't letting me.
Wait, if the demand is there, the product. Wait. If the demand on eBay is there.
That's what I'm saying.
You're saying that people want to buy it on eBay. So maybe people like to get the product at a discount. That means they like the product and they like to save some money. There's nothing wrong with that. I do that with products I like.
Okay.
Yes, but if it's not the company that's selling the product on eBay, what possesses people that have gone out and paid the premium for this product? That the average selling price.
Well, I don't believe people are paying a premium and then selling it on eBay at a loss.
Well, then you should do some research because that's exactly what's happening.
Okay. All right. Last question.
You're thinking that people are buying the product from Herbalife and then putting it on eBay at a loss.
So the company is not listing the product on eBay. So we know it's not them.
I understand that.
So it's people that have bought the product for one reason or another and are reselling it. And they're reselling it at a discount. And they're reselling it at a discount,
not at a loss.
All right, Ivan.
Wait a second. No. It's a discount to what they paid, which is a loss for them.
Wait. No, it's not. So somebody's business model is to exist buying a product from Herbalife and selling it on eBay at a loss. I'm not saying that there's not product on eBay.
It doesn't make sense, right?
Well, no, but why do you say they're selling it at a loss?
Look, you're arriving at the same point that I am, which is it doesn't make sense. The supply is there.
Well, no.
Because
yes, the supply is there because the demand is there. You're saying, why are people selling Herbalife products on eBay? Because I'm sure there's people who like to buy it on eBay.
No.
Okay.
Assuming supply and demand is a zero-sum game across all mediums. Now, a website like eBay or Amazon, and I'd encourage you to go online and look at different websites where you can buy product that's being resold. That supply
I'm sure
is
it's there in everywhere. Because I've seen Herbalife bars in a deli where the guy may be an Herbalife distributor and he buys bars and he puts them by the counter, and you can buy the bars one at a time from the box, or you could buy a whole box. That guy's not losing money selling them.
So there's Herbalife supply
in different channels.
There's Herbalife supply everywhere. I think we can agree on that. I want to wrap up here. Same question to each of you. I'll start with you, Ivan, and then I'll go to Chris. Ivan, what would change your mind about Herbalife as an investment?
Well, significant negative sales trends that could not be reversed. That would be a start.
Okay.
I don't mind the controversy. I mean, in controversy, there's opportunity, and and every recommendation doesn't always work. But I believe there's a number of good fundamental points supporting the fact that the stock will go higher.
And Chris, what would change your mind about Herbalife? What would make you bullish?
Look, I just to calm it down here for a second, I completely agree with Ivan when he says that controversy creates opportunity. I think he's right about that, and I don't think I just find this particular analysis misguided. But there are situations and circumstances where I would change my mind, and I've thought about those. So, for instance, if the company had gone out and perhaps been acquired by, or not acquired, or had gone out and acquired, a retail company like GNC, where they could start to merge the multi-level marketing model with the traditional model. That would be an instance where I would have to sit back and really reconsider the scenario. Or, if from a technical perspective, another larger investor came in, or Icon decided to continue buying his stake up to 30%, 35%. I mean, these are very real scenarios where
he has increased it a lot.
Excuse me. He has asked for permission to buy up to 50% of the company, and he has made token buys when the stock has crashed or when the narrative has not benefited him, and he's done nothing else since then. Okay, let me finish my thought. The point of the matter is there are scenarios where I would reconsider the analysis, but it's always going to be on top of the fact that the model that they have been running and the model that they continue to run, to me, does not appear to be a sustainable model. I mean, Ivan, why have they stopped publishing their total number of members in their annual report? This is something they've done every year. It went all the way up to 4.1 million, and then they just decided, let's not talk about it anymore. Why would you omit a disclosure like that? Or why would you omit, a disclosure like...
And yes, I agree. More information is better than less. And certainly everybody would like to see it.
So there's definitely situations and circumstances where I would reconsider my thesis. As it stands right now, I think it's probably one of the most attractive times to, present or advocate for the bear case over the last 3 years. But to Ivan's credit, you know what? It's not the first time I've said that. And I've been wrong many, many times in the past.
All right. Thank you both so much. Ivan Feinseth, he's the partner and CIO and head of research at Tigress Financial Partners. Chris Irons of Quoth the Raven Research. Thank you both so much.
Thanks, Ivan. I appreciate it. Thanks, Ben.
Nice to meet you. Thank you.
Bye-bye.